Welcome to the 5-minute market news update from WealthNetic channel. Financial gladiators, what a whirlwind week it's been. After yesterday's dramatic sell-off, Wall Street staged a powerful comeback today, Friday, November 21st, 2025. The major indices closed sharply higher, primarily fueled by a sudden surge in optimism for a Federal Reserve interest rate cut next month. But don't let the green fool you entirely. This market remains incredibly fragile, especially with those lingering AI bubble concerns. Let's dive straight into the numbers for today's close. The Dow Jones Industrial Average jumped an impressive 1.4%, adding roguely 650 points to its value. The S&P 500 also climbed 1.4%, reversing a significant portion of yesterday's losses, and the tech-heavy Nasdaq Composite led the charge, gaining 1.5%. However, it's crucial to remember that, despite today's strong performance, all three major indices are still poised to close the week lower, reflecting the intense volatility we've experienced. In the bond market, the U.S. 10-year Treasury yield eased to 4.06%, its lowest level since late October, as rate cut bets intensified. Over to commodities, crude oil futures saw declines, with WTI crude dropping nearly 2% to $57.90 per barrel, reaching a one-month low, influenced by a strong dollar and renewed peace talks in the Russia-Ukraine conflict. Gold futures, however, managed a slight gain, rising 0.6% to $4,085 per ounce. The real story driving today's market action is a dramatic shift in Federal Reserve expectations. Just yesterday, investors were spooked by the possibility the Fed might hold off on further rate cuts. This led to Thursday's sharp decline, where an initial rally, spurred by robust earnings from AI chip giant NVIDIA, completely evaporated. NVIDIA itself, after reporting strong results on Wednesday, surprisingly ended down 3.2% on Thursday as broader market fears took hold. But today, hope returned. New York Fed President John Williams delivered remarks suggesting room for a further adjustment in interest rates in the near term. This dovish tone sent waves of optimism through the market. According to the CME FedWatch tool, the probability of a December rate cut surged dramatically to around 71 to 73%, up from just 39% the day prior. This turnaround highlights the market's extreme sensitivity to Fed policy. The mixed September jobs data, released yesterday, which showed more jobs added than expected but also an uptick in the unemployment rate, initially created uncertainty. But Williams' comments tilted the scales firmly towards a more accommodative monetary policy, igniting today's rally. Looking at the sectors, Friday saw a notable rotation. While tech eventually rebounded, early gains were seen in consumer discretionary and healthcare, which were among the top performers in the S&P 500. Rate cut hopes significantly boosted homebuilders, with names like DR, Horton, PulteGroup, and Lennar all seeing strong gains. Retailers also had a good day, with Gap jumping after reporting stronger than expected profits and an improved outlook, and Ross Stores likewise soaring on strong results. However, the lingering concerns around AI valuations continued to cause jitters. While NVIDIA saw a slight pre-market gain, it was still described as skittish and even dipped during trading today, reflecting the ongoing debate about the sustainability of the AI rally. And the crypto market continued its bearish trend, with Bitcoin extending its slide, falling below $85,000 and even touching multi-month lows before a slight recovery. So, what's our daily takeaway from this roller coaster week? The market is in a highly reactive state, swinging wildly on Federal Reserve sentiment and the ongoing re-evaluation of high-flying AI stocks. Today's rebound on rate cut hopes gives some breathing room, but the underlying volatility and concerns about valuations haven't magically disappeared. Investors remain keen for clearer signals on inflation and the future path of interest rates. Remember, this information is for educational and entertainment purposes only and should not be considered financial advice. Always do your own research and consult with a financial professional before making any investment decisions. Stay informed, stay strategic, and we'll catch you next time for more market insights. Thanks for watching.